Alibaba stock versus Amazon stock. We are talking about two of the biggest giants out there in the stock market today, guys. So many people own one of these stocks, if not both of these stocks. And what I want to go ahead and do for you guys here today is break them down, kind of compare them against each other, and give you my opinion on which one is a better stock to buy out there. And we're going to go through 8 core categories that are super important whenever you look at a company, all right? Some of these categories are more fact-based, and some of them are going to be more based upon my opinion. I'll kind of explain my opinion on some of those categories. You know, things like who's got the bigger opportunity, which one do fund managers understand more, which one is more trustworthy, which one has better leadership. Some of those things are going to be more of my opinion. I'll explain those, and then some of these are just honestly fact-based, like which one has better EPS growth, which one has revenue growth, and that's really what investing is at the end of the day. It's a balancing act of looking at the facts based upon companies and also looking at what your opinion is based upon that company in general. So that's what we're going to go into. I hope you guys really enjoy this. By the way, an analyst came out today and just upgraded Amazon stock, says the stock's going to $2,500 within the next 12 months. So that should be very interesting to see if that works out there. Well over $1 trillion valuation would be on the company if it does hit $2,500. It's already getting very, very close to 2,000. So it is completely possible out there, guys. So anyways, I hope you guys really enjoy this. As always, by the way, if you enjoy stock market news, make sure you follow me on Instagram. I post a lot of stuff on Instagram, you know, lifestyle stuff and all that, those kind of things, but also a lot of stock market news I post on my Instagram story. So if you want to keep up to date on things that I'm paying attention to out there in the market, you might want to go ahead and follow me on there. So let's get into this, guys. We have 8 core categories. Which one is more trustworthy as far as which one does the investment community trust more? Which one do fund managers understand more, which is a super important category, because in that category, fund managers are what really dictate the market. They're the ones that are controlling billions of dollars, tens of billions of dollars, or sometimes hundreds of billions of dollars out there. Fund managers. So they're really the ones that can dictate if a stock goes up or down based upon their buying. Which one has better leadership? Which one has better revenue growth? Which one has better EPS growth? Which company is more diversified? Which company has bigger opportunity for the company to grow in the future? And then which one has a lower forward P? So trust category. This first category, I would give this one to Amazon right off the bat as far as which one is trusted more by Wall Street, all right? So Amazon has been a public company for a far longer time than Alibaba. Alibaba came to be a public company back in 2014, okay? So it's less than 5 years that company has been a public company. Amazon, on the other hand, has been a public company since the 90s. So there's this gigantic track record of Amazon growing, doing numbers, the management being in focus, all those type of things, okay? Since the 90s, since before the dot-com bubble. They're actually one of the few companies that made it through that whole thing, okay? And so Amazon's been a public company for a long time. It's also an American company, so it's not a Chinese corporation. Chinese corporations aren't trusted as much as American corporations, you could say, for right or for wrong. That's your own opinion, but it's just a fact that American corporations are trusted more than Chinese corporations, all right? And lastly there, we can look at just the mere fact that if you buy Alibaba shares, you're buying ADS, okay, which is a different deal than if you buy Amazon shares straight up, okay? It's different ownership in the company, all right? So different ownership structure there. So in terms of which stock is more trusted by Wall Street, by you know, fund managers, by just regular individuals out there, Amazon without question, okay? Which stock do fund managers understand better? Once again, this would be Amazon once again, okay, guys? In terms of big fund managers, the majority of them are US-based fund managers, all right, as far as investing in stocks. The Chinese market is still a market that's very dictated on just, you know, capital investment in their own businesses and also real estate market. The Chinese still have not gotten big into stock market. If you look at the average diversification in terms of the wealthy individual in China, it's actually much tailored toward real estate investing rather than stock market investing, whereas here it's a little more towards stock market investing in a balance of real estate investing. So fund managers understanding it, you're going to deal with mostly US people, all right? Meaning, who are the U.S. fund managers, you know, that all live in New York City? Who's the company they're going to understand much better? Obviously, it's Amazon. These are individuals who probably use Amazon or are very, you know, affiliated with the company that have understood it for decades now. So Amazon's much easier to understand rather than Alibaba, which for the most part doesn't have much of a presence here in the United States, okay? Here in the United States, Alibaba doesn't have much of a presence unless you do drop shipping or something like that. Then you're familiar with AliExpress. Other than that, Alibaba Alibaba's a massive company in China and Asia in general, but outside of Asia, especially in the United States, most people just don't know what Alibaba is. They have no clue what they do or anything like that. So in terms of fund managers understanding it better, Amazon is definitely a very simple business model. Amazon Web Services, they also own Twitch, okay? And that's kind of the core of Amazon there, all right? Which one has better leadership? This category I had to give a tie to, okay? I could not give, it to one person or another. Leadership, we're going to think at the top, the most important, right? We got Jeff Bezos on one side, we have Jack Ma on the other side. Both these guys are phenomenal. Both these guys have done an amazing job growing their companies, battling against a ton of competitors. You got to think about how many competitors come into the space all the time in both markets. Both have done an amazing job. Both have led their companies to be huge public companies now in the limelight, all that type of stuff. So I cannot say Jeff Bezos is better than Jack Ma. I cannot say, the other executives there at Amazon are better than Alibaba or vice versa. They're just both phenomenal management teams. You don't grow to be a huge company like this. Like Amazon's starting to approach $1 trillion market cap at this point in time. It could be there. So depending on where the stock goes, Alibaba's around $500 billion market cap. You don't get to that size without having an amazing management team there that can keep expanding that company over time. So for that reason, I just got to give it a tie there, guys. So as of right now, it's looking pretty good for Amazon, right? Revenue growth. This one, Alibaba wins. So this is the first category that Alibaba wins flat out on a fact-based category. So Alibaba's revenue growth right now is growing over 60%, whereas Amazon right now it's nothing to sneeze at. They're growing in the high 30s right now. Amazon's in the high 30s. Alibba's over 60, which is absolutely ridiculous for a company Alibaba's size, all right? So revenue growth right now, it is in Alibaba's favor, and it should probably continue to be in Alibaba's favor. EPS growth. This one, by far, Amazon is killing it, okay? Amazon is killing it pretty much better than any other company in terms of their overall EPS growth. This last quarter was ridiculous. They're not consistent right now in terms of they have a consistent growth rate going with EPS, but some quarters right now it's up hundreds of percent, some quarters it's up thousands of percent, okay, in terms of what their net income is versus the previous year. It is a massive, massive improvement there for Amazon right now in the EPS category. Right now, Alibaba still is not very focused on EPS. I would say Amazon is more focused on EPS growth than Alibaba is, but Amazon still isn't even at the point in time quite yet where they're all focused on just growing that EPS, growing that profit, growing that net income yet. But they're a lot closer to that day than Alibaba. Alibaba is still very much focused on those massive revenue growth and the massive opportunities in front of that company as of right now, okay? So once again, another category Amazon wins. It's looking very good. Which one is more diversified? This one is a very hard one here, guys. This is a very hard one. Both companies are very well diversified, actually. You have Amazon, which on one hand has the Amazon platform, okay? And from that Amazon platform, a ton of people sell on there, a ton of sellers sell through the Amazon platform. Then on top of that, they have ads you can place on there for products and services that you sell. Those make Amazon money. You also have Twitch, which Amazon owns. You also have Amazon Web Services, which is the most exciting and profitability part of their business. So they're definitely a diversified business, but when I look at it, I gotta say Alibaba wins this category, okay? Alibaba has two massive platforms over in China, which is, business, consumers to consumers. They also have platforms that are huge for business to consumers. They also have the biggest platform as far as business to business. They also have a ton of different media outlets and whatnot that they own. So this is a company that, and then they have AliExpress, which obviously is more of a China to international type business. They have so many businesses. Also, they have a big, huge ownership stake in Alipay, which is owned by a company named Ant Financial, which they have a huge ownership stake in. So they're more diversified at the end of the day. Although Amazon is definitely very diversified, it's not as diversified as Alibaba. It's one of the most diversified businesses literally in the entire world. I would say when I think about diversified business models, there are a few that come to mind. Alibaba, Tencent, and Berkshire Hathaway, owned by Warren Buffett, okay? Those three companies are the first ones that come to my mind when I think about the most diversified business models you could possibly invest in, all right? All right, which one has an overall bigger opportunity? For this category, I give it to Alibaba, and let me explain why I believe Alibaba has a bigger opportunity to continue to expand over the next 5-10 years than Amazon. So Amazon, I think, will continue to grow into the future, okay? I do generally feel like it's a little overvalued right now. We'll go into that in just a second. But in terms of Amazon, they should grow for a long time in the future and at very nice growth rates, all right? Double-digit growth for a long time in the future. But when I look at Alibaba, I look at a company that's growing, revenue 60%-ish right now, right? This is a company that is a Chinese-based company that has all the advantage of 1.3 billion people, all right? Amazon's home market is unbelievably competitive, okay? It's a market that has a lot of people that are doing very well, okay? A lot of people making, 40, 50 plus thousand a year, whereas China, not nearly as many make 40, 50 plus thousand a year. However, when you look at the way the middle class is coming up in China right now, and when you think about 1.3 billion people just in its home market versus 300-ish million here in the United States of America, which is Amazon's home market, if you're just looking at it from that perspective, that's a massive advantage to Alibaba. Also, Alibaba has a great chance to probably win some of the other huge regions around Asia and whatnot, whereas Amazon's, that's a little more foreign territory for them. So when I look at it from that perspective, and then I look at it from also the perspective that Alibaba is more diversified as a business model, and they have more things that they can pull for growth levers in the future. For that reason, I have to give an overall bigger opportunity to Alibaba than Amazon. But once again, I think Amazon will grow for a long time in the future at double-digit clips. I just think Alibaba is going to grow at a faster clip over the next 5 to 10 years than Amazon will ultimately, okay? So Alibaba I see as a bigger opportunity. And then lower forward PE, Baba wins this one by a mile, and it's not even really close. Amazon right now trades at a forward PE in the 70s, whereas Alibaba right now trades at a forward PE in the 20s. So they're not even really comparable there. And the thing I love about that, right, is that you're getting a business model that's actually growing faster. The revenue growth is actually much faster in Amazon right now, but it's actually, you're getting the business model for a lower forward PE than what you're getting Amazon for, okay? Obviously, Amazon kind of is always going to maybe trade a little higher as far as their valuation than something like Alibaba, just because, once again, there's that trust factor, and there's this factor that fund managers just understand the business model, because obviously Amazon's here in the United States and whatnot. So from that perspective, you can make an argument that Amazon always will command a higher PE than something like Alibaba, but right now it's a dramatic difference. Like I said, over 70 plus for Amazon, whereas we're in the 20s right now for Baba. So I feel Amazon's a little overvalued from where it's at. I feel like it's going to grow for a long time in the future. I'm very bullish on Amazon in terms of where I think the company's going in the future. But in terms of the short term right now, I feel like it's an overvalued business model. I don't think it should be trading at a forward PE in the 70s right now. If you look at the current PE, it's 100 and, oh my gosh, it's 160 or whatever, okay? Super high. Forward PE is what I paid more attention to. I think the forward PE on Amazon should be more in the 40 to 50 range right now. They're growing profits unbelievably well, but trading at 78 or whatever forward PE, that's a little too high. So when I look at it all in total, we see that Baba ends up winning 4 categories, Amazon wins 3 categories, and obviously they tied on the leadership category. But I want to know your guys' opinion on this. Which stock do you prefer, Alibaba or do you prefer Amazon? Which one do you think is a better deal? Which one do you think is going to do better in terms of the stock price performance and the business underlying fundamentals over the next 5 to 10 years? I would really love to hear from you guys in that comment section. As always, thank you for watching. Have a great day.